Alright guys, welcome back to another video. Let's go over today's trade that I took, today's trading session. Again, we're gonna determine the bias, go over my thought process, my emotions, how I felt about everything, how I felt about the price action that was happening in that moment. Um, I can already tell you that I did not really stick to my plan because I was in a hurry because I had to help my cousin with something for school, and it was not at her house, and then I had to rush back with car back, well, basically home. And I got at the charts basically a minute before the market actually opened, and that messed up with my psychology, with my mentality, because I was already in a hurry, and I came to these charts like with intention to not miss anything, and fear of missing out was playing with me, um, which was already a bad start to today's trading session. But I thought that I had it under control, which was kind of the case, but at the same time it was not, because later on I found out that I messed up in the middle of trading when I was already in position. And all, I'm gonna give you a quick lesson right now. Don't listen to your emotions when you're trading. If you are in this field, you are trying to learn it, you're not profitable yet. Like, learn from my mistakes. I make a lot of them. I still make them. I've been studying these charts and this skill. I've been learning this skill for over a year now. I'm still not profitable actually, but I'm getting close. I'm getting real close. I started to journal. I've been avoiding this journaling part of this business for, well, almost the whole year that I've been learning. When I was already trading, already trying to pass some challenges, already when I was um, trading forex pairs, basically. Now I switched to futures, as I've talked already in some of my streams. Uh, yeah, that's about it for now. Like, don't listen to your emotions. Let's get a bit deep about it. Trading has nothing to do with money, even though we're all in it for the money. But when you think about money, there's a lot of fear that comes with it, and you don't want to act from the fear. Let's say fear of missing out, fear of not like being enough for others, like your parents. You always want to prove yourself to someone. I don't know whoever it is, even maybe to yourself. I mean, you have to do this for yourself, but you have to take it with, this is not the place to express your emotions. This is the place to express your discipline, your creativity, but not in an emotional way. Basically, the creative part about is how you're gonna react based on your rules that you set before you even open the charts, basically, because you must know where you're gonna enter, you must know where you're gonna exit. And if you don't stick to your plans, you do the mistakes that I do. I do them on a daily basis, basically. I've been trying to fix this. I'm getting close to it. Um, I'm not there yet, but every day I actually learn something new. Especially, like, one of the reason is the streaming that I do of my trading sessions, because it shows you how I trade publicly. Everyone can see this, even though I know not a lot of people watch me, but I get the feeling that I've got other people watching me. So that means that I actually have to like do this professionally and make smart decisions, even though I'm not doing them yet. It forces me to learn and actually show you how this thing is done. So let's basically determine now our daily bias. I use the same concept as yesterday, which is mostly just one thing. Well, it's based on two things, but the most important thing is the New York Midnight Open price. So, sorry. So, if the price at around 9 a.m. is still very much below the New York midnight open, then we're probably going to react from some type of PD array, which is an order block, which is a fair value gap, which is maybe like it could be a sweep of some form of liquidity, and then like act in the opposite and just shoot straight to the opposite direction. And that's exactly what happened. Like we had a bit of consolidation in the Asian session, as you can see right here. Then if Tokyo is consolidation, then London is most likely, like at least the first part, the manipulation part of it. So we can see that that's basically what happened here. I'm gonna close this now. Volume is not so important. I don't even know why I use volume, because there's even the volume can, like, it's not really what's the word for it? It's not reliable. Even the volume can mess up with your analysis and stuff, even in real time, basically. So we did have this 1 hour order block and this 1 hour fair value gap, which was very big. That's why we must minimize it to something else. That's why we go to 15-minute charts, and we can find an inverse fair value gap now inside of this order block. So that's maybe also this could be a potential like reversing point. But this was today's important fair value gap that I should have kept my eye on, but I did not. So this is at 8:30 open, which means that I just opened my charts just a minute before, around here, and I thought, okay, price is acting impulsively, we're most likely going to go up, as my bias tells me, but there was no real like entry point from this. There's no fair value gap, there was no actual sweep of some form of sell side liquidity. I mean, this was not it. Why is this not the actual manipulation move and the sweep of like the main sweep of anything? Because we have no real displacement here. We can see that the price was very slowly coming up, sweeping this liquidity, then just consolidating. So that means the price is not ready to go yet, but I thought it is. But this high only created equal highs on at this point over here, and I jumped into a position and got out with with a loss below here, as I'm gonna show you right now. As you can see, these are my today's executions. I jumped into longs above, I mean almost at the high of this body, of this black candle. Then I got stopped out at the bottom, just below these lows. Market was not ready to go yet. It swapped this liquidity, reacted to this mini fair order block, rallied up. The only fair value gap is this one right here, but as you can see, well, there was no real market structure shift from this. As you can see, like I could say it was the shift through here, but like there's no structure that would give me an actual opportunity. This fair value gap is only in line with this high, which is way too far back, and that has nothing to do with current price action. And that's where I went in with 5 contracts, added 5 more above here, because I thought that we're just gonna go straight up, but that never really happens, does it? Like it did not happen yesterday, and today I did the same mistake. So that might be the lesson that I must get from this, beside the emotional part. So yeah, basically we broke through this intermediate low. This could have been market structure shift. Well, it was actually. This was the market structure shift to the downside. Um, I thought, well, maybe this is like going to be a turtle soup, but we got another. Well, the point was that we completely disrespected this fair value gap, which was in the premium side of the range. So it had no real, like it was not an actual confluence for my model. Then this was basically the trade that I should have taken. This could have been one trade, but luckily at least I recognized and reversed my position down here and actually made some profit in the end. Like around here, I believe I was already in a bit of a profit, but that was like just the money that I made from this reversal only like mitigated the loss that I took from here to here, and this loss, and put me like $100 above the yesterday's balance, which was like that's nothing, but it was enough to basically mess up with my head. I thought, well, we could just created another fair value gap inside of here. So if I see an expansion to the downside, then I am going to jump back in. And I did, and I immediately put my stop loss to break even. And I did get taken out, or I believe I closed it manually because I did not want to like hit my stop loss at the break even. If I'm wrong, let's just take a little bit of profit, and that put me like $150 above yesterday's balance, which is like a real small amount, but at least it's something. That was kind of my, I don't know, that's how I mitigated the pain. I eased my pain from this because I then, when all of this happened, I was already like very confused. I did not know what the market was doing, even though all the information was presented. Everything I needed to jump long happened just right here. And now we're gonna go over it, how I should have reacted. Okay. So at this point, now I know, okay, the market opened. We swept this liquidity, but created another very strong swing high with low resistance near the New York midnight open. We know that we're going to create some kind of a strong manipulation to the downside that's going to be very like prominent, very visible. It's going to like just fall into your arms almost. And I should have recognized that this is actually a market maker sell model. Well, this is the sell side of the curve, and now I can probably expect buy side of the curve. And if I just stayed patient enough for this moment and not take any trade inside of here, like this was not what I was waiting for. Even though like the model was present, I should have at least targeted short, not long, because it was like a sell model for me. But this did not align with my daily bias, so there was no actual opportunity according to my rules. And I should have recognized that. But let's now take a look. What just happened at this point? What's happening? Okay, we swept buy side, but we created another equal low with this high. I mean equal high with this high. We step into order block on a 1 hour time frame. Also, like from the 1 hour time frame, we are now rejecting this inverse fair value gap for the first time. We come down, and the next candle actually strongly pushes back up, like right back up. That's on a different time frame. That would be just a week, I believe. Yeah, it's a week. On a 2-minute time frame, that's a week. And also, ES created an SMT with NQ here. I'm just gonna do it like this because it doesn't really matter. But that was a very strong SMT. It was visible even on a higher time frame. It was not like a small time frame. And also there was an SMT at these lows. So double SMT. Okay, no real opportunity yet. The market might still go straight down. Okay, so that means there's no opportunity. Okay, we're going up, we're going up. That's where I thought I might like short again, but I was able to recognize that like I'm not thinking straight anymore. So I just let the market do its thing. And at this point, I should have now known that this was the displacement actually that I was waiting for, because it was quite strong, as you can see. Like a little bit of hesitation around here because there's a fair value gap and another one, but we broke with a lot of intention to break this high. Like we broke just through it. We did only create a week, but if you can see, we completely disrespected this bearish fair value gap, created another bullish fair value gap to the ups, so that means to the upside. And we also have this now breaker block, and I could have just entered either here or either here. Stop loss down below here because it's below this inverse, but there's no real bullish fair value gap here, so that's a good placement of a stop loss actually. Like I already know that it's not gonna hit it, but I believe that's the logic behind it why it did not. And my target could have been this high, I believe. Was it this high? Yeah, I think it was. Yeah, that was the high that I should have been targeting. And now let's see what happens. So I entered around 13 contracts. So let's say that my conviction wasn't so messed up and I would have entered 15 contracts. Let's just round it up. And let's see what happens from here. So this is the market structure ship. We have an SMT, another SMT. We can see that the market is printing out market maker now buy model, basically the buy side of the curve. We did everything we had to do. We built a lot of buy side liquidity, and this is the manipulation move. This is the displacement. Everything aligns. I buy 5. I add another 5. Now let's pause. Where's my stop loss? Let's say it's below here, and my take profits are above here. All right, what I can see now is that we are hunting at least this side, I mean at least this buy side liquidity. We are not even like in that much of a risk anymore, because we can move that to break even now. Now let's play forward. I can add another 5 here. I'm already in a bit of a profit, and I can move my stop to break even because we just reacted off of this order block. We break through high, another reaction, and we're continuously creating upside moves. I can move my stop now here because there's no real reason to go back down. So below here, even if the price reverses, I still make a little bit of profit. Let's say I sell 5 here and let the rest just go straight up. Even if it comes back down over here, I still make profits. I still make almost, well, more than 1,000, basically 1,005, which is not small. Imagine it was real money. $1,000 in a single hour. That's crazy. Okay, we stop a little bit and we continue higher. Move stop to here. And basically our target, our final target was hit. And that's basically it for today. This would have been a nice 5.7 risk to reward ratio trade. Amazing opportunity that I missed on. This should have been the executions of my today's trading session, but I was just in a way too much hurry with everything. I did not stick to my bias, basically. Well, at first I did, but there was no information for me to take action on. Nothing was there yet, and I just wanted to act because I did not want to miss out. Fear of missing out is still like messing with my head. I'm trying to get it under control. So that's what you must learn from this video. I'm explaining this to myself basically, because I need to like get it on a deeper level. Like I know all of this stuff already. I've read so much about it, listened so much about it, but it's not really inside of my subconscious yet. But yeah, up to this point, there's no opportunity yet for me to go long. After you see this and this candle, which create a fair value gap, you can even put like a, where was the initial buy? 25. Yeah, it was down here, but it's all right. Even if I put it here, just at the start of the fair value gap, still like a 4.7 trade. That's an amazing opportunity. Like there's nothing wrong with that, and it's just like a small difference in the profits that I would make. I've got basically nothing else to say. That's what I should have done today. That's how I should have acted. Should have not taken any. Should not be taking any trades inside of here. There's no real. There is no setup. Not even not no real. But there was no setup yet, and I just feared that I'm gonna miss on. I mean, like miss out on something. That's the part that I'm disappointed in about myself. Like I'm proud that I recognize the conditions that the market is turning against me with a strong move. Um, and I did reverse my position at the right time to at least make back the loss that I had. Um, but other than that, I just I gained some experience. I got a lesson. Hopefully, I'm gonna learn from it, not make the same mistakes again. And that's basically about it for this video. Um, hopefully, you got some value out of it. And I'll see you. I don't know when, because I don't know if I'm gonna even be at the charts tomorrow because of the news. So just simply see you next time. Bye.